So I'm just going to jump in straight away. So I'm wondering, since the panel is trading trends and challenges 2024, what were the challenges that you saw in 2024? And I think we can just start with Miroslav, because obviously you have very different setups, very different brokers or liquidity providers. So would it be good to know what you have to face?
Okay, as many challenges which we face, first is actually it's the same what we had from previous year. Swap abusers, we offer swap free, so we have a lot of swap abusers.
So you still offer swap free?
Yes,
everybody, they still offer swap free.
If you monitor it on paper way, you could offer it. So yeah, this is first challenge which we face. Maybe second is bonus abusers, which again is we offer bonuses, and we had a lot of people which abuse this. We had also leverage abusers, which some people over leverage their accounts, which they take advantage during the news. What else? We had.
So those swap free accounts, do you offer them together with bonus accounts, or is it separately?
Sorry?
Those swap free accounts, can I get a bonus and swap free?
Generally it's separately, but maybe we have some cases in which was together.
So how do you protect yourself then from swap?
So how we protect ourselves? Normally we monitor constantly. We compare what is the swap which was saved from the certain account, certain client, IB, country, the profile which we decide to monitor, and we compare with the revenues from these clients, not swaps, but they paying commissions and markups. So we compare generated swap and commission with saved swap. If the ratio is bigger than certain threshold which we have, then we switch these accounts to normal paying accounts. On top of this, we have a limit for swap, net open position limit for swap free accounts, so they are not able to open bigger than a certain amount.
Okay, that's good. Do you want to comment or ask anything?
Yeah, okay. So what I would like to ask is, I do see some change in the trading book from 2023 to 2024. Yeah, basically.
Sorry, Michalis, what challenges have you seen? Thank you, Miroslav.
Yeah, so we don't offer swap free, so we're going to take any questions on that. So one of the main challenges we had is due to our rapid expansion in the LATAM countries in South America. We saw that traders from these countries, they have very distinctive trading behaviors and preferences. For example, they trade on a much wider range of instruments than the usual popular pairs. So even though this diversify our portfolio, it became very challenging for us to sustain optimal trading conditions for these products. The other big challenge was due to the very big increase in gold prices. Yeah, so as you know, this year it went up 35%. So for one, it made it difficult for us to have competitive spreads like we used to have. But more importantly, we saw big directional positions from clients, which increased our exposure by quite a lot. So we had to take some extraordinary measures to address this issue. So for us, this was the two main challenges we had.
Did you do it? Because even in the group, we had a lot of people asking what do you do with one directional gold exposure, and some dealers were sharing ideas, but it's a very difficult thing to tackle. So what's your policy on it? Yeah. How do you...
So actually, this is something that I will develop in another question. But to give like a summary, we developed some technologies that adjust the margin and the spreads according to the market conditions. So this is something we developed that really helped us with this.
So it's automatic, right?
Yeah,
When you
yes. It's automatic for one part. Of course, you need to have the human factor in this, the experienced dealers. But there are some ways to limit the exposure.
Okay, very good. Lochlan, I know you have a very good gold pricing, so I'm wondering what you are doing with all the gold exposure.
Yeah, it's a really good question. I'll come back to that if that's okay. I want to talk about
Sure, so
swap. No, it's good.
to ruin your flow.
So with swap free, it's very interesting. So obviously swap free was and has been something that's been immensely popular for the last few years. Obviously with interest rates increasing, particularly last year and the lead up to this year, it's made it very difficult for brokers to offer swap free. I know that there are some Middle Eastern specific or focus brokers like Scope, like ATFX, like many others, which I won't mention because I don't want to give them free publicity, that have offered swap free. And they've begun to roll that back. And one of the measures that they have taken to roll back or to mitigate against swap arb, which is so common at the moment, is by offering it for a set and only offering it for a set amount of time. So maybe 7 days swap free trial or something like that. And I believe that's something that Scope does offer, and we monitor the flow in case it is blatant swap arb.
So do you offer swap free as a liquidity provider, or just
It is an option. It is an option. Yeah, it's absolutely an option. It might be mine. Apologies. The thing with swap free for me is I come from a tier 1 liquidity provider. Swaps are something that are inherently charged from FXPB level. So it's if you went to JP Morgan or you went to Goldman Sachs and you said, "Can I please have swap free?" you would be laughed out of the room within seconds. So it's a very interesting sort of position that Scope's in, ATFX, Zenfinex, to mitigate between what we're offered from our prime brokers and what our clients want. And I think that it's all about trying to find the middle ground and obviously not facilitating the abusers and trying to identify those abusers as quickly as possible. In terms of gold, it's a pretty similar story. Gold, it would probably fascinate many people in this room. Maybe not. I'm not sure. If they found out what a tier 1 prime broker like JP Morgan or Goldman Sachs asked for margin requirement, the margin requirement starts at 10%. 10% with JP Morgan.
I know. Yeah.
And it increases from there. It may not be a surprise to some, but I assume it's a surprise for those that ask us for 0.5%.
I find it baffling, like what the real market conditions are.
It's difficult.
That we're offering to the retail clients.
Exactly. But the thing is, that's the benefit of brokers or liquidity providers like ourselves is we have the balance sheet. So we subsidize that margin with our own balance sheet. And that's where, looking for liquidity providers that have a strong balance sheet is essential, because what are we doing? We're subsidizing the margin requirements that our prime brokers are asking from us, or we're intelligently internalizing, which is also risky.
Yeah, fair enough. Roman, I know you're raring to ask a question.
Thank you. As long as we touch gold, how did the trading book has changed since the last year, let's say, to the current year? So let's say in terms of gold, what is the ratio of gold in your portfolios, guys, now?
In our company, gold was the top product in previous year, 2023, and also in this year. Maybe it's around 50% of the flow. And this is the most traded instrument in our book.
50%?
Yeah.
Okay. Quite low.
That's quite low, I would say. Should be like 70. Yeah, I would say it's like 60-70% of gold. And then, guys, what I see at least,
so that our book is more diversified.
What is the second asset?
The second asset is stock indexes.
Stock indices. What about cryptos these days?
In our business is very niche product. we do not target so hard this business. Maybe our conditions are not the best one, but we have business in crypto, but they are not like one of the top products. Even it's moving very aggressive.
All right. And you gentlemen, in terms of gold.
Yeah. In ATFX, because the largest clientele we have is from Asia, and you know how much they love gold in Asia. So we are more closer to 70%, like you said. The second one, I would say it's USD yen, for obvious reasons.
Right.
Everything okay? Yeah.
So you said 70%.
Yeah, 70% it's gold. The second one is USD yen. But I just want to add that this year, our book structure changed a lot because we acquired a lot of new clients from the Latin America. So we saw a lot of instruments that we were not seeing before, like exotics. They really like to trade on Turkish lira and South Africa R1 because exotics have more volatility. So they're looking for more opportunities to profit. But besides what is traded more, gold has made huge changes in our book structure because, again, of what I said of the directional positions that they took. So they also take it for longer periods, right? So we had exposure to the market for prolonged periods. So that's why we have to make some more precise risk management and hedging strategies for our book.
Thank you. What about scope? Is it higher or lower than 7?
It's pretty in line with ATFX, which I think complements our gold price. Yeah. Look, I think most people, it would be really interesting to know what if we could ask the audience, if we could get their feedback, that would be maybe something for another time. Later on. It would be, the thing is, when people are asked this question, a lot of people are ashamed to say it's so high because everyone wants diversification. And the truth is, there is some brokers here today that have suffered significant losses from gold that are in this room right now. Their brokers have gone under because they were unable to handle the risk appropriately. And I'm not saying that I know how. I'm in the sales team. So, but I think what's important to know is that we're an undiversified market and industry, and it is scary. But I think what you need to look for is, in terms of the percentage, very similar to ATFX. Gold is a significant part of our business. And I think that it's all about making sure that you face safe counterparties, as I said before, checking balance sheet and the licenses that they have, and ensuring that you get the best possible product and that people will honor the spreads that they have on screen.
Great, thank you. So I'm just wondering, in terms of, as you said, one directional market, really pretty much gold, 70%. What kind of tools and features have you implemented as a broker within 2024 that you could say helped you operate in that market? Is there anything specific? Anybody? Yeah, Miroslav, go for it.
Okay. So first,
can we please ask to be quiet? It's really hard to hear ourselves. Thank you.
So yeah, we developed in-house risk system which classify the clients based on their knowledge level with maybe 100 different indicators. So it's give house according to system the knowledge level, and we can book the most experienced system clients according to the system. Also, we classify the clients about their toxicity level, so through scalping, again, it's captured automatically from the system. Apart from this, so we have other tools which somehow change the parameters of execution based on the type of the client, based on the type of the flow. For example, if
some of the tools you have.
and the third, we also implemented one tool for market abuse. Is merit for compliance.
Fantastic. Michalis.
So actually, we introduced 3 tools and features this year to our dealing desk. The first one is an AI-driven risk management tool. which basically monitors trend positions and behaviors in real time. And then it helps us to better categorize them, whether they go to A book or B book. And in addition to that, it allows us for dynamic hedging. So basically, if it detects some risky trading patterns, it will automatically hedge a part of the positions, right? So this was something we developed in-house, and it helped us quite a lot with the market conditions.
What is it based on? Is it like time frame? Is it market, the movement of the
Yes,
market?
it's so complicated. I don't have all the answers. I mean, we have some geniuses in the IT department, but mostly, yeah, it takes time of exposure, but mostly it says the behaviors of client, right? The second system is what we call a dynamic hedging pricing. So basically, it makes adjustments to the spreads according to the market conditions, right? And the type of client. So we can have better execution and more tight spreads, even in volatile market conditions. And the third tool was the management for latency. It's a latency management system that allows us to detect latency arbitrage, which is a big issue.
Yeah.
And also we moved our service to Hong Kong Equinix, so for faster execution. So the combination of these two solutions, it allows us to minimize opportunities for toxic behaviors like latency arbitrage.
Okay, that makes sense. Wow, fantastic.
Nice.
Surprise me.
That sounds really good.
Awesome.
We have very similar tools. I mean, those tools they're essential and they're really. Is it me? I think those risk management tools, if you don't already have those three tools that you mentioned before, from a liquidity point of view, or even from a retail broker point of view, you're missing a trick. You need to be sure. You need to be on top of these things. You need to be alerted to abusive behavior within seconds, which I'm sure many people here are saying, of course I am, but I guarantee there's 30% that are saying, I look at it on a T+1 basis. And if you're looking at abusive behavior on a T+1 basis, give me a call. No, look, it's, I think any sort of like starting with basic tools, like looking at the markouts of individual retail end clients, end users is absolutely critical. Being alerted to latency arbitrage is also essential. And then, you've got what we see is one of the biggest increasing problems, which I'm sure a lot of people would be able to resonate with this, is Asia-based retail clients starting new accounts, continually cycling these new accounts with copy trades or EAs that are intentionally causing market impact through their copy trading expert advisors. This is
how do you track them? So is it IP based or behavior based that you hire?
It's hard with IP when they use VPNs.
Flag it.
Yeah, we try. It's a great question. We do our best. I think the most important thing to do is, and something that we have to our benefit is, we're very fortunate, I'm sure just like these gentlemen, to have so many broker clients that we can leverage that knowledge from really over 100 different institutional broker clients, and then capture the information, pick up on the trend, and be able to identify it happening in real time. That's why we all have 24-hour dealing desks to ensure that we can pick up on this abusive behavior. It's not about making as much money as possible. Really, it's about trying not to lose money and also helping our clients protect their downside. So that's been a big problem.
In terms of as long as we touch gold, and as long as we speak about protecting the revenue, is there any dangerous patterns that you guys cannot cope with in terms of trading? And we continue the discussion about the retail traders from Asia that are trading gold during the Asian session and so on and so forth. So if, I'm sure it's a problem of 90% of the brokerages here, the Asian traffic with the gold shard flow. So what to do with this? How do you guys cope? is there any possibility to accommodate it somehow and to monetize this kind of flow? Just please give us your practices.
So we also have a big part of this stage on share flow. Normally, we have problems with our LPs if we give this flow to them. We constantly face downgrading of our feed with some LPs if we start sending such flow. So what we are doing, we tagging the end clients, and based on the tagging, give different executions. So we assign different liquidity pools to different clients based of their style of trading, based of trade decades which they have, how fast their positions grow on profit. So this is the main what we can do.
So eventually, as a liquidity provider, you would accept a broker sending you this flow as well, right?
Yes, and if he sent a lot of this flow, another broker, he will receive it, which will be with different conditions, different executions based of this flow. He will be fit for challenging flow.
Okay. And ATFX and Scope, how do you guys work with that flow?
Yeah. Look, we've seen some dangerous patterns. They're not necessarily new, but we see them in increased frequency. So one of them is the increased exploitation for arbitrage, right?
This is interesting. Listen.
Yeah. So we see increased exploitation of arbitrage. So traders now, they have faster retail or professional trading systems, which allows them to exploit price discrepancies between brokers or liquidity providers. So how we deal with it, we revamped our pricing engine in order to detect and correct these discrepancies almost automatically and immediately. Another dangerous pattern we saw was the over-leveraging of clients, especially in volatile markets. And this will result in a lot of slippage and negative balances. So our solution was to introduce dynamic matching requirements. So basically, it would change the dynamic of the leverage of positions according to the market volatility. So this helped quite a lot with the negative balances situation. We also saw a rise in risky strategies such as greed and multi-gain, which not only affects the client, but affects the broker as well, right? So for this, we also use AI to detect more easily this kind of patterns, and then to change the trading conditions accordingly. And finally, we saw another trading in exotics, right? We saw that clients really underestimate the low liquidity and high slippage for these products. So what we try to do is firstly educate them about the risks involved in trading exotics, and also we increase the matching requirements for these products. So yeah, I would say these are the four main dangerous patterns that we faced this year. Yeah.
Thank you.
The focus was on gold specifically, or
No, any dangerous patterns, anything that you have witnessed, including the gold.
yeah, look, I'm no expert on the retail side, but I think bonus abusers and arbitrage is still something that is consistently out there, and everyone needs to be very aware of. Going back to the gold and in terms of execution, it's a topic that I'm very passionate about, and a topic I think Elina is very passionate about, and I support her thoughts thoroughly. You know, is there such thing as best execution? I'm not going to answer that because I think everyone in this room might be in trouble. Look, the thing is that these abusers are out there. It's basically guaranteed wins, right? If it's a guaranteed win, is it unfair by definition to slip them or to execute them or to reject them in a different way? If they're a guaranteed winner on the original feed, I'd love to hear what everyone else thinks. It's not for me to answer. From our point of view, as a liquidity provider, as a liquidity provider, I won't answer that myself because it's not my area of expertise. I have my own feelings on it. From my point of view, it's all about identifying these abusers in collaboration with our clients, just like I'm sure most of these people do, and alerting them, even if they're not trading with us. We see trends across all of the clients that we have at the moment, not just in gold, in DAX, for example, which has been a very commonly abused symbol. And then we notify our other clients so that we protect their B-book. Just because they're not hedging with us doesn't mean that we don't want to help them and protect them. I think it's all about having the right technology, which obviously, and quick plug, Your Bourse has these alerting tools. But truthfully, you need to have these tools. If you're not, you're falling behind.
Thank you very much. I think that was really insightful. Should we take some questions?
If there are any questions, guys, please feel free.
Where is Roman? Roman, we need a question. Come on.
Thank you, Elina. Actually, I wanted to ask how you, if let's say I'm a SciSec and I will catch you for your tale about best execution, and I will ask you, okay, this client A you slipped, and this client B you didn't, and you have provided to me the best execution paper. How are you gonna reply to me, let's say, not to pay penalty to me for slipping a client? To anyone, whatever.
Yeah. Sorry, could you repeat the question?
How you combine in the same brokerage? We're talking about the license, of course. The fact that best execution policy requires you to give best execution to a client, and at the same time, you're slipping a client because you think that he is a cheater, but maybe he is not. Maybe he's just, I don't know, he's trying to get the best execution, but you're slipping him without a reason.
It's a good question.
How do you explain to me, if I am a regulator, why you treat these clients differently?
One way would be historic trades. So if they win every single time, that's pretty unlikely. If they're winning from 15 milliseconds after trade inception, it's pretty likely that they're arbitraging. So using markouts, market impact tools, which Your Bourse has, most of the technology providers have, and hopefully all these brokers have at their disposal, would be one way. It's a great question. How do you define best execution in that regard? I think that's for the regulators to answer, not for us.
Well, I could, let's say, enforce my question a little bit. If I am a client, or your client has a technology a little bit more superior than yours, then it doesn't mean that this client is bad. It means that he is just a little bit more clever and he made a little more investment in his technology than you did. So why you treat him badly and what?
That's a great point, because I agree with you in that respect. If the client is, because not all arbitrage is bad. Arbitrage by definition is making the market and making the product more efficient, right? It's making it more efficient. In that respect, I completely agree with you. I'm not in support of slipping. I'm not. I'm actually not at all. I think that arbitrage by definition is making a market more efficient. So
It definitely helps us improve. Yeah. All right.
It's a great point.
Question. Thank you. Do we have any more questions? Yes? No?
Hello. I would just say on top of that if you have a business and someone has better technology than you, that's fine, okay? And of course, to protect your business and your book, you will add some markup, which will protect yourself from this client or this broker who has a better technology. There's nothing wrong with that. You can find someone else who has equal technology and execute his trades there. Otherwise, for example, if you don't have a same book or a same debt or a trade through the same LP with a same spread, let's say, then of course you will have the sweeping through the book. You will have some latency because your server is there and my server is there. You will have all of that stopping up on your execution. But best execution is what? Best execution is that I request this price
and I get filled at this price. Then there is a lot of factors in the middle. One factor is that your order size. The other factor is that how fast the price travels to you and how fast the price travels to you who offers you to continue to execute that order. Not just to monitor what is the price right now. This is what I have said.
Yeah, that's a really good point too. I think like
We have a speaker for the next panel.
I'll just quickly comment, like, I think both raise really good points, and it is a very hard thing to address. I think that in the past, a lot of liquidity providers, a lot of brokers have sort of just done a slapstick solution to cover the downside. Something like slipping clients to a non-visible quote book is something that has happened in the past.
Shadow. All right. Yeah, that doesn't work anymore. Anyway, thank you so much. I think
Thank
it's
you.
really insightful.
Thank you.